Good afternoon. How is everybody doing? Afternoon, Mumo. Mumo. That's a weird noise. Marco, Robert, Soul Trader. Afternoon. I'm thinking of buying a Trump phone. Yeah, go for it. He's launching his own new phone service, isn't he? Yeah. Sounds good. I shall definitely be using that. Not sure what to call the tariff. Not sure what the call tariff will be. That's a good one. Do you think he'll have tariffs on his mobile phones? Got tariffs on everything else. Afternoon, Fletch, Sebastian, Danny, David. Afternoon, Paul, Elevated, Plowman. How are we all doing? Right. So, yeah. So Trump's launching a mobile phone network. He's going to call it Trump Link. A little bit like Starlink, but obviously not the same. Anyway. So this is the news this morning. As you can see, there's nothing in red. We've had nothing impactive happen I said there's been lots of stuff impactive happening in Iran and Israel, just nothing newsworthy because it's all just them shooting each other still. So there's not really anything that's been announced this morning that has impacted the markets in any way, shape or form. There's a lot of stuff coming out, obviously, about what everyone's planning, what they're doing, etc. But there's nothing escalatory happened this morning. So today we've got no news. Sorry, I was just going through the low impact news as part of a little project I'm doing. So there's no news today apart from Empire, which came out at 16. Other than that, that's it for today. So scheduled-wise news, there's nothing new. And obviously, we've got the stuff that's already come out this morning on Financial Juice, which was nothing as well. So first news event we've got really this week is the Bank of Japan rate, which is coming out tomorrow morning. So just looking at what's happened to the market today, we've had quite a bit of movement today, mainly on the Australian pairs. Aussie New Zealand's are not a good example, but Aussie US obviously flown through the roof, Aussie CAD through the roof, Aussie Swiss up. So Australian dollar has had a big rally today. The Swiss franc has moved. We covered that in this morning's live room. They basically have been undoing the Swiss franc move from the Friday safe haven run, or Thursday stroke Friday safe haven run. So that's a V-shaped recovery. There's a little bit more movement on that today. If you look at some of the other Swiss pairs, so Euro Swiss, for example, we had quite a big spike up 125 ADR today on that one. But that's come back down and undone 50% of that move already. So you can see the ADRs there. Euro Swiss, for example, I'm already in short on this. Let me just move that over there. So your entry on it was quite difficult today because this was quite a big parabolic move we had this morning. So obviously there's very little bearish price action in it. So you couldn't really get in on a reversal alert because there was no selling. So your first clue was up here, this kind of 3-bar reversal this morning. And then we pushed back into propulsion and sold it. So that was kind of your entry. It's coming down again quite hard in the last 5 minutes. So that was 125 extension. Aussie US was a 125 extension. We're still up there. There's no pullback on this Australian dollar at the moment. But as you can see, we are right up at the monthly highs, which we've tested 3 times and not got through. So this is a brilliant sell. Even if you just went for a 50% retracement on it, you know, it's pretty easy to get in, isn't it? So there's no signs of any bear movement as yet, though. So if you look at the last 5 minutes, 5-minute time frame rather, it's just up, not stopping. So you did have a reversal alert here, and you would have had. No, you wouldn't have had one there. So I think this, since you hit ADR today. Actually, yeah, no, you would have there. Sorry. So you would have had a reversal alert there on that candle at ADR. And obviously you'd have had one there as well. So, yeah, still pushing away. So good looking short opportunity, Aussie US. Not quite sure why the Aussie is quite so strong today. It is. But you've also got the weekly level coming up here. So this is last week's high off the back of that news spike, and obviously the monthly level. So yeah, good looking short. Look at that. Parabolic has not had one red candle all day today since since London opened. Yeah, just on. So good short. That's going to be very exhausted and come down pretty quick. So those are your ADRs. There's quite a few of them. Obviously, all the New Zealand dollar pairs have also gone. So this is a commodity run. So yeah, I mean, it's unlikely it's going to be sustained. There's no reason for it to be sustained. New Zealand US is a lovely resistance as well. Look, so you're coming up to 125 ADR, testing last week's high. You got previous week's high as well, and obviously this area is where they've been selling for the last week and a half. Good looking short. So again, drop down M5, wait for a reversal alert. You're not going to get one for a while on that. So there's your first reversal that will go in. So if you want to use just bearish price action, 3-bar reversal, bearish engulfing, moving average cross, all good opportunities. RSIs are also extended. We've got a few of those. We did have actually they've all gone now. So we looked at these this morning. I think there's about 4, but Swiss yen on the 4-hour is extended to the upside. I've got 3 short on that at the moment. So that's my next entry there, which is just above the high of the week. High of today, which is kind of a rubbish candle. But so yeah, so looking for some kind of pullback on that leg. We've also got US dollar CAD extended. Just checking on the news. Just got my news feed up. Every now and again it flashes at me and tells me something's going on. But so US dollar CAD, obviously this dollar not happy. The Canadian dollar definitely taking advantage on the oil price, but the US dollar really getting hammered at the minute. Again today, not doing very well. So yeah, could this week be another down week? We'll have to wait and see. So yeah, big drop there on the US dollar CAD. That CAD's really racing away. Lovely divergence on this. That's just coming back down, but it is still bullish. Yeah, so you got bullish divergence there. Markets making new lows, market structure-wise, on ascending relative strength. So that is going to pop at some point. It's just a case of when. We need some catalysts. So news-wise, you've got no catalysts coming up until tomorrow afternoon, really. US dollar retail. So that's your first opportunity for the dollar to find some strength this week. Afternoon, Mark, Virginia, how are we doing? So yeah, so those are your news events this week. We covered the news this morning in the live room. We're not going to go through it again, but it's interest rates this week. So we've got 4 interest rates coming out this week. So just be aware of that. There's going to be a lot of movement. We've got the Japanese tomorrow morning. We've got the Fed, obviously, Wednesday evening. We've got the Swiss on Thursday morning, and then we've got the pound on Thursday afternoon. So every day this week, starting tomorrow, we've got an interest rate decision. The only one that has any real opportunity to come out different to forecast is the Swiss. They are saying they're going to go down by a quarter, back down to 0. Most economists agree. The Swiss are absolutely renowned at coming out and saying, you know what, we changed our mind. Yeah. So if you look at the historical on it, they come out all the time and do something different. So don't be shocked if that comes out at a quarter. It's unlikely to come out at negative, but it's not unknown. The Swiss have said that they will go to negative interest rates again. Yeah. So then, it's not unusual for the Swiss franc to be at negative interest rates. Go back to pre-COVID. And even post-COVID, negative interest rates are normal. So, don't think for any second that couldn't come out as a negative 0.25. It can do. But it's unusual for them to move a 0.5% at a time. 0.25% is the norm. So I don't think we'll get anything different this week, but we'll wait and see. So there's your news events this week. We've got CPIs and retails and all sorts of other things scattered in between them as well. Let's just have a quick look where we are with the US indices. So this morning wasn't great on the European markets. The DAX was a whipsaw today. So there's your 5-minute range. We broke short, couldn't get any downside momentum. So we came back up. We broke long, or tried to break long, immediately stopped out. So literally just rotational whipsaw this morning. We did have a crack at going long. Again, it's failed. So market couldn't get started at all today. FTSE, one failed break long, second break worked up to target and stopped out in profit on the second half of that one. So no profit this morning, but a couple of $100 lost, so it's nothing. So we'll see where we go with the US. So 5-minute ranges are in. 5-minute trades taken on the Dow and on the S&P. No trade on the NASDAQ yet. So the 10-minute range is within inside the 5-minute range. We've just kind of popped our head out on the S&P. But again, that's looking pretty tricky. That's the 10-minute range, that one on the S&P. The 5-minute range was just too small. And 5-minute ORB on the Dow. So looking at where we're going today, I can't believe these markets are going to be bullish with what's going on in Israel. Fear should be starting to set in. We should be starting to pull risky assets, stocks, and sticking it into things like gold and FX. So safe haven specifically. But the market did completely undo those safe haven runs that we had end of last week. So it may be that they do not actually see this as a threat, this Israel escalation with Iran. And if that is the case, then obviously we could see bullish markets. But in theory, when you get conflict, that is what you get. Yeah. And that is certainly what we've been given as soon as it kicked off. But it's the same as the Swiss franc. Got quite a lot of it undone on Friday. So it'd be interesting to see whether we run again and try and get these all-time highs. We're not far away from all-time highs on these indices at the minute. NASDAQ's just popped out the highs. So there's your all-time high for the NAS. S&P up here. Is that all-time highs? I don't think it is actually. Is it on the S&P? No, it's not. Sorry, that's not all-time highs. Well, it's recent highs. Obviously, this is Trump getting in January. So technically, that's your yearly high. But realistically, that's your yearly high that we put in last week, isn't it? So we're expecting to run the highs on the S&P. But obviously, when a conflict kicks off, it tends to have completely the opposite effect. So we'll see where we go today. It does look like the S&P is trying to break long. NASDAQ, again, same thing. This is going to be your sort of near as damn it yearly high. That is obviously the highs that we're attempting to run at the moment. The Dow Jones is way down. Industrial stocks never do as well in a downturn. So, yeah, we got miles to go for the Dow. So loads of upside. But all these others, if you look at them, S&P and the NAS, you're going to, and we're not going to do it today, obviously, because ADR is miles away. Sorry, the high is miles away. So there's the high. So you'd need to do sort of 225, 250 ADR basically to test those. We're not going to get 250 ADR today. I'd be very surprised. It's going to take something pretty spectacular to get that done. But we have got the gap fill. So interim target is going to be Thursday's high, which is ADR today. So that's your gap fill complete. Then you'd be looking to run the weekly highs. So, but first, let's see if we manage to get out those highs because it's struggling. Again, today, we are just struggling. Same as we were this morning with the European indices. We're not really getting very far at the minute. Choppy old markets. NASDAQ's rejecting highs. Dow's out. That's your Friday high here. Why's the DAX there? Yeah, big rejection on the NASDAQ, look. And the S&P and the Dow. Market not wanting to go long. Again, I entered US dollar CAD long because there was a good reversal chances with within 2 ADR. US dollar CAD. Yeah, I mean I like it long. I just don't like the dollar at the moment. I can't think economically, fundamentally, trumpedly of any reason you would buy the dollar. There just isn't one at the minute. There's just no reason to buy the dollar. Economically, nope. Tariff-wise, nope. Stock-wise, nope. Getting involved in Iran-wise, nope. Trump-wise, nope. All the news last week, nope. Look at last week's fundamentals. 90% of last week's fundamentals were dollar. Red, 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 red. Sea of red. There's just no reason to buy the dollar at the moment, which you can see. But it will pull back. It will come back. But we need a catalyst. We've got nothing. There's no reason. You've got to have a reason for the market to want to do something. The market literally has no reason. Oh, big pop there. What's that? 249. Russian Foreign Ministry. Russia is discussing Iran with the US. Why that would pop the market? That wasn't it. Something else just happened there. It was either a big order just came in or something's about to hit financial juice. We've got G7 talks going on at the moment, which you obviously need to be aware of as well. But with that US dollar CAD, this support here is likely to act as a catalyst. So we've had, if you look at the drop from there, we've had no pullback on that yet. That pulled back 50%. This has not pulled back at all. So if this just continues to drop, they are going to meet support here. There's buyers there. We know there's buyers there. But you've got to bear in mind, this is September last year. This is pre-Trump. There were buyers pre-Trump. Are there buyers post-Trump? Yeah, just because it's bounced there, it's likely to get a reaction, but it's not necessarily going to bounce. So you get that. And if that gets you out, that's fine. But don't expect it necessarily to do that. Something's got to change with that dollar for the market to have confidence in the dollar again. I think it'd be easy to do, wouldn't you? But we don't seem to be able to, do we? Do you also consider entries based on the potential timings of news events? I don't personally, but you can do. We covered this in the members stream, Marco, on Wednesday. So you'll remember. If you weren't there, it's worth watching. Trying to find it. It's right in front of my eyes. There we go. Fundamentals, how they affect market moves and multi-day strategies. Yeah. So that video kind of covers that, which is, yeah, I mean, they're worth using, but you need something positive. You need a catalyst. So if for example, last week, we just looked at that news last week for the dollar. This one, isn't it? Yeah. So when Trump, not when Trump spoke, when the CPI numbers came out on that Wednesday, they were all quite bad. So yeah, hit the sell button on something dollar then. Keep in it and wait for the next news to come out, which is there. The PPI figures negative the next day. Add to it or hold it. Next day, Michigan comes out. Positive. Yeah, exit. So there's, trading is about taking signals. Signals are whatever you want. Your cat throwing up a furball in the corner, news events, indicators, price action, support resistance, moon phases. Doesn't matter why you get in, does it? It matters what happens after you get in. The reason for entering the market has got nothing to do with making money. It's how you manage the trade and how you get out of the trade that makes you the money at the end of the day. So there's nothing wrong with using news events. I do, and this trade here is a perfect example of a really bad news event. Yeah. So this is an example of exactly that. I shorted that there on pound negative news. And it was big negative news. What we were expecting was a big drop in the pound. And the pound did weaken on it, but it popped back the next day, all the way back up and undid that move. That pop back the next day there was nothing to do with the pound. That was Trump. Yeah. So, you know, this was my signal to go short. It was a news event. And I was like, need to short the pound. I'm going to take a breakout. I never take a breakout, but we've been basing here for 2 weeks. And if we break down below that level, I reckon we're going to flush down into propulsion. That's what I said in the stream. That's what I thought. That's what I did. That's why I hit the button. What happened was Trump ruined my plans. So now I am in a short, waiting for some bullish price action on the dollar or some bearish price action on the pound to come in again. But the reason for the trade was fundamentals. But that's no difference to taking, you know, a lot of people, whenever I mention the RSI to some people, they say, yeah, when it gets down below 50, you short it. No, when it gets down below 70, I buy it, or below 20, I buy it. But that's the wrong way to use it. It's your opinion, it's the wrong way to use it. And if we didn't have a difference in opinion, there wouldn't be any trading, would there? So my opinion there was it needs to be a short. Other people's opinion there was we're going to bounce. One of you's right, one of you's wrong. But whichever way you look at it, whichever indicator you're using to enter the market, that has nothing to do with making money. If it goes down, that's why I make money. If it goes up, that's why I make money. Because I press the button has got nothing to do with it. But I'm working on a website at the moment for fundamentals, which I'm in the middle of doing. Sorry. Yeah, which is hopefully going to be a little bit more indicative of movement on using fundamentals. So it's probably something you'd be able to use as signals. We are breaking out to the upside nicely now. I'm just going to check my target levels. Yeah, so there's your propulsion move from Friday. So this is the real kind of Globex Open when it all kicked off with the missiles being fired. So the missiles got fired here, didn't they? So Friday the 13th was obviously when we had the big drop. So this is your initial propulsion move. So that's not a bad target for upside on that one. NASDAQ. Thursday's high, which is also the high from Tuesday, is where I'm looking to get our initial exit. So that's not a bad level, although we might just immediately reject that, which could be a problem. I've got 3 longs on. So what I'm going to do is I'm just going to move the NASDAQ target down. And I'm going to get out the majority of that in a minute. And then I'll leave the S&P running with the DOW. That's the DAX. S&P, it's the same as the NASDAQ, really. So we're going to go for a run. Let's go for a run. See if we can get there. Keep an eye on those. Something's definitely triggered that move. Oh, here we go. Iran signals it wants to de-escalate hostilities with Israel. Wow. Thanks for that. There goes my oil trade. Marvelous. There goes my oil trade. So that's the reason for that pump. Iran stated privately it will resume nuclear talks if the US stays out of the fight. Okay, so that is all bullish. That's greed, basically, or risk on. So, yeah, we might get a good run on those highs today. So, worth holding these. What should I do with that oil trade? Typical. So I'm just doing some maths in my head. 170. I'm just going to take another buy there. Just want to get the average down. I think that in all realistic terms, we're probably going to return here. So what I'm looking to try and do is just keep this average a little bit closer so that when we get down to here, I can get an aggressive position on, hopefully just look for a kind of a 50% pullback to get out with a small loss on it. It might pop back up again. Israel might turn around and go, screw you, Iran. We're not stopping. And it all re-escalates again. And it all, we'll be back up here by the end of the week. So I'm not ruling out, but that is obviously an initial reaction to Iran saying, please stop bombing us, which is understandable. Would you wait until tomorrow before placing another trade and thus wait for RSI to get even more extended? On what? Not sure what we were talking about there. I wouldn't mind buying US dollar yen when it gets down to support. Yeah. I don't really know what the dollar's going to be doing. Tomorrow we've got the Japanese interest rate decision, which is going to be unchanged. Whether the market sees that as bullish or bearish, we'll have to wait until tomorrow. But it's certainly not going to be massively bearish for the yen. So we may well get a little bit of a rally on the yen tomorrow, which will bring you down into these support areas. So anywhere from sort of 175 to 125 ADR. So this little half ADR sort of corridor here. This propulsion move basically upwards to last week's low is kind of your area, which is a good buy area. But again, the dollar's going to be weak. There's no reason for that to strengthen up still. So New Zealand US 125 ADR out the highs. New Zealand dollar rallying, commodities rallying further. Someone knew about this, didn't they? Someone knew this was coming. It's amazing how much the market knows in advance of news events. Yeah. That's what I said when I came on stream. I can't really see any reason why the Australian and the New Zealand are rallying, but I can tell you it's commodity related. Bang. Commodities start to, oil starts to drop. Good for commodities market. Oil popping, bad for commodities market. They do the opposite to safe haven runs, basically. Aussie US 150 ADR. There we go. We're on Aussie US. So there we go, out of those highs. Be careful with this. Might get a run on it. I don't really see any reason why you should be necessarily exceeding those highs off of the back of this. So this wouldn't be a bad spot for a short if you can find some bearish price action. Wait for it to slow down a little bit though. Okay, target, just about to hit target on the NASDAQ and the Dow. Just going to move my Dow down just so that I close out on that. I'm also going to move the NAS target down as well. I'm just going to take partials on both of those, regardless of where that candle closes in the next 2 minutes. Just want to reduce exposure just in case we've got news happening. So what I don't want is Israel to come out and say, we will not stop until Iran's nuclear capabilities are completely destroyed, which is another escalation, obviously. What happens if Iran cannot de-escalate here? So if Iran's turning around and going, all right, you got us, we'll have a chat now about all of this with the US. If Israel turns around and now and says, I don't care what you want to talk about the US with, we want you to have no nuclear capability, we're not stopping. Then what does the US do? It's so complicated, this situation. It's unbelievable. But anyway. Just wait for that to close out. I've got 1 minute left on these 5-minute candles. Website sounds great. Will you also incorporate the concept of exposure in it? He said no. Some sessions ago, you were saying about working on something is a bit more elaborate in correlation with my FX book. Was I? Double, triple exposure is catching me out once in a while. Israel is not stopping. No, I don't think it will. So basically, what I'm working on is a well, it's not my website, although I might become a bit more involved in it. But there you go, partial close on the NASDAQ and the Dow. S&P is automatically moved up to break even. So that's all locked in. That's locked in. That's locked in. So that is the minimum win for the day. Whatever we get out the trailer, basically. So yeah, basically what I'm working on is it's I suppose you call it a trader portal, if you like. It's got lots of different sections to it. There's an analysis section where you can analyze your trading results. There's an AI section which will analyze your trading results for you and give you pointers. There is a fundamental section where you can look up all fundamental historical data, analyze the forecast against the actual, against the previous. And then you can look at that and look at a price chart and see what impact each news event had. It does differentials based on forecast and actual for fundamental news releases. What else does it do? It's got a fundamental scorecard, so it obviously will calculate roughly what it thinks the strength and weakness of individual currencies are. It's got a currency strength meter built in. It's got what else has it got? Loads of stuff. I mean, it's basically a kind of everything you need as an FX trader without all the crap. Yeah. So the trouble, I think, with a lot of websites is, which is why I kind of like it, and I just sort of jumped on with the guys and said, I'll help you develop it. A lot of the websites you see out there, like investing.com, for example, this has a shed load of information on it. Yeah. It's got everything you could possibly want to know about everything. The problem is you can't find your way around this and figure out how to use any of this information to your advantage. Oh, it's also got retail sentiment in it as well. That's the other thing. So it's combining retail sentiment with fundamentals, with all sorts of other stuff, currency strength and things, to give you a guiding light, if you like, as to what should be happening in the future. But you can get all of that from here, except you can never find what you want. So, you know, there's all the technical indicators. So again, that the website that I'm working on, they will give you all of this information as well. So Euro US dollar is a strong buy on the 5-minute technical analysis. Why? That's utterly useless to you, me, and everybody else on the planet. Tell me why it's a strong buy. Tell me why that is a strong sell. Yeah. The moving averages. Which moving averages? Why are they good? Why are they bad? Yeah, all this information. There's a lot of sites like this out there that give you all this stuff, and people go, "Oh, it gives you really good signals." They haven't got a clue what these signals are. You can't say it's good. It's saying it's a strong sell. Why is it a strong sell? Why should you be selling the US dollar yen at the moment? Utterly useless, isn't it? And 5, 15, hourly, daily, they're all strong sells. Yeah, you've missed that. It's been dropping for ages. So you shouldn't be selling it now, should you? Look at the US dollar yen. You don't sell it now. You sold it here. Or you sold it here. Yeah. On a daily, yeah, you know, it's all, it doesn't give you any context as to what you should be doing. So what the guys are working on is this is the best thing to do in this situation, and here's the proof, and this is what we think is going to happen based on historics, blah, blah, blah. Obviously, if Trump comes out and says something, or Israel fires a missile into Jordan or anywhere else that it shouldn't have, things are going to kick off and it's not going to mean anything. But that's the same as every indicator on the planet. If the RSI is extended to the upside and all of a sudden something happens which drives the price 200 ADR higher, it's got nothing to do with RSI. But it's a really good site in the fact that it kind of shows you why you should be doing what you should be doing, but it doesn't tell you how to trade. It doesn't give you any signals. It doesn't give you any more information than factual data. Sentiment is obviously a fantastic thing. I built my website, my fundamental trades website. So a lot of what is on this website is what I had on my fundamental trades website. Yeah. So the scorecard, fundamental data, the differentials, all this sort of stuff. So it's a bit more advanced than this, though. You know, my one was put together as a for me type thing. I just put this together at the wrong time because obviously when COVID hit, this all kind of went straight out the window, didn't it? Interest rates have got nothing to do with price movement when you've got an entire world shut. We know what's happening with interest rates; they're going down. You know, so but it does a lot of what this does. So it allows you to analyze all this data and it plots it beautifully on charts and graphs and stuff. So, but it has got also a retail sentiment section as well. So yeah, but I think it's going to be quite a few months before it's finished. It's a big project. But it's the AI side of things I like, the way that it analyzes your historical trading activity and says, you're really good at that, you're really crap at that. Sort that out. That's going to be invaluable for a lot of people, I think. I've caught up in the chat. That's good. Makes a change, doesn't it? Right. Let's go back and have a look at the indices. So 5-minute pullback. So watch for a flag break in this propulsion gap. If we're going to do a 50% pullback, you're coming back into that propulsion gap, which is this high here. So this propulsion gap here is that high break. So that's all the volume needed to get through those resistance, those sellers there. So they've rolled those over. Everybody that got rolled over there is flipped long. Therefore, that's where they're going to add more size. If it gets there, but this is a very strong move. Market really likes this. I don't want to look at oil. Oh, that's all right. I'll live with that. So we just retested kind of the gap up there. That's where we opened, gap up. So that is a retest of the gap up. We haven't retested that section there, which is your sort of high, previous high. But that potentially could be the undoing of this move, and we're going to just calm down from here. So we'll see what happens. Has anybody got any other pairs they want to look at? Quite like the look of that Aussie US now. It's really out the highs today. US dollar. So weakness on the dollar still. That stock market rallies, this dollar's not going to be in much joy today. We'll have a good move up on gold as well coming. That's a good little pullback area on gold. On the oil, do you plan on taking profit by matching the fib to the Ukraine war? Well, that oil trade's shot now. It's, well, no. I mean, I don't know. I wouldn't look at what happened in Ukraine and compare it with what's happening there. The Ukraine one was a bit tricky because we had this build-up prior to that kicking off. We knew weeks in advance that this was going to happen because, you know, Russia were amassing hundreds of thousands of troops on the border saying, we're doing a special military operation. Nothing to see here, nothing to worry about. And the world was like, yeah, you're going to invade Ukraine. So the oil price went up. And then when they actually did it, it went up. Yeah, this is a little bit different. This is more pound New Zealand 125 ADR, New Zealand on the move more. This is more of a shock move. So if it isn't going to follow through, obviously there's no reason for that to happen. But if it did escalate, then yeah. You'd be looking for something similar-ish, maybe, but I don't think it would get as far as the Russian one. The thing with the main difference between the Russian conflict and this, although this is in the Middle East where most of the oil is produced, all the pipelines go through Ukraine and Russia. Yeah, Russia controls a lot of the flow of oil. Russia controls, or did control, most of the purchasing or supply to Europe. Doesn't anymore because we've now learnt that that's not a good thing. So we're now buying elsewhere. But the oil flow through this area is less, the disruption to this oil flow is less impactful than it is for Ukraine and Russia. So it'll be a different reaction. But, you know, market's kind of still inside bar. Yeah. So today, if we still close up here somewhere today, doesn't mean this move is over. It means that we've had some knee-jerk reaction. Oh, this looks like it could calm down. We haven't heard Israel's response yet. If Israel's response is what I would expect it to be, which is, we don't care, you can talk to anyone you like to, we're going to stop you regardless, that is going to disrupt oil supply because Iran has turned around and said, we will turn off pipelines. And if they do turn off pipelines, that is going to restrict supply. So it's whether or not they do that with discussions with the US or without discussions with the US. Okay. Geopolitical stuff is almost impossible to forecast. All this sort of stuff, you know, you just know what happens. You know, every time there's a conflict, that goes through the roof. Every time there's a conflict, gold goes through the roof. Every time there's a conflict, stock indices crash. That's what you know. So that's what you do. How it does it, when it does it, how far it goes is a variable. And it's always different. So, you know, you can see here we're back to where we started. So this could well be the market going, yep, whatever, that's over. But it takes one red news event. Yeah. And then we're back to where we were before. Israel warplanes may strike at Iranian state TV in Tehran. A battered Iran signals it wants to de-escalate hostilities with Israel and negotiate. Air superiority. That's why it's important to have a good air force. Pound CAD. Goodbye. So you just had a reversal alert and retest. So if we break that high, we're off back up into propulsion. So this is potentially a false breakout to the downside. So again, this is caused by oil. Yeah. Canada, large oil producer. Yeah. So oil price goes up. Canadian dollar rallies. Pound CAD comes down. Oil price drops. CAD drops, pound CAD goes up. So again, it's all interlinked. It's all the same stuff. Everything you see on every chart is all the same price action. It's just different impacts on different currencies. So this is part of the oil move. Whether it's going to continue or not is going to do that or that. So, if oil supply is constrained, the Canadians will sell more oil, which means they'll produce more oil, which means that the Canadian dollar will rally. Yeah. If this all calms down, oil production is not impacted, it won't necessarily weaken the Canadian dollar, but it certainly won't strengthen it. Therefore, we're then reliant on whether or not the pound has got any legs, which it hasn't at the moment. But it's not particularly weak either. You can see what's happening. There's no strength or weakness in the pound or the CAD. Something happens to the pound. There's no strength or weakness in the pound or the CAD. Something happens to one of them. I think that was a pound as well. But if we get back down into here, you're looking to come up into here. If you get up into here, you're probably looking to come down into here. So look for where the price is going. Yeah, and plan around that. That's all you can do. This will go one way or the other, depending on oil price. Who knows? On the oil, do you plan taking profits matching fib to the Ukraine war, like if oil didn't drop? Yeah, so if oil didn't drop, I've already answered this one anyway. It depends on where it goes. You just don't know. But I'm not the sort of person that will go for a home run, as you probably know if you've been in here for any period of time. I'm not interested in glory. I'm interested in making money. If this thing gets up to that double top and I see signs of rejection, I'll close it and I'll wait for another opportunity to have a go at it. I'm not going to hold for a home run. Yeah. If you look at what you could get out of it, that day where it really, or that week really, where it kicked off, we did 335. That's 10 ADR. Yeah. So we did 10 ADR. We did 3 ADR. Last week. So you're looking at potentially you're looking at coming up to here. That sort of area is where you're probably going to find some resistance, but you'd want to watch that area there as well. But it all depends on your P&L. If the price gets up to here, the decision-making process for me is how much money have I got in my P&L open? Can I buy a holiday with it? Yes, it's mine. I'm not going to make a decision based on that is what I'm expecting to happen, because that is not what's happening now. That is what happened when Russia invaded Ukraine. This is what's happened when Israel shot a load of missiles into Iran. Iran cannot defend itself in the way that Ukraine can. It has no air superiority. It has no allies with air superiority. Israel has 200 jets, plus Britain and the US with all its jets behind it. Iran's not got a hope in hell, is it, of defending itself? So you can't expect to get the same reaction to this escalation as you would to that escalation. It's just not the same thing. It's gonna have a different reaction. What it will be, we don't know. I checked the position trading course, but I cannot find the concept of risk over ATR. It's in video 1. Video 1 is about ADR. How the forex market moves and how to measure movement. This is a transcript of the whole thing, so obviously ADR's in there lots. But I mean, I don't specifically go. I mean, ATR. I don't talk about ATR at all because I work in ADR. But it's the same thing. ATR is just ADR on the ADR is just ATR on the daily time frame. So all you're doing with ADR is you're looking at the average true range of the daily time frame going from yesterday. So that is a ATR 10 on the hourly. ATR 10 on the daily is ADR. So when you're placing risk on an initial trade, for example, if I was to say I'm going to go long now and I want to risk 0.5% over 1 ADR, I would basically measure 1 ADR and calculate my lot size based on that distance to make sure that when we hit there, I'm risking X% over 1 average daily range. It's obviously, I think what you may be saying is I don't go into the calculations. No, because I've got EAs that do all that for me. It's incredibly complex because every single instrument is different. Every single broker has a different pip amount. But you need something to calculate it for you. But yeah, it's just all ADR is the average daily range. So, this is what this indicator is. If I find something that's not actually, oh yeah, that's fine. So if you look at this Aussie dollar CAD, obviously there's your low of the day. The average daily range is 53 pips. So if you measure from there, 53 pips up, you will find the average daily range. If you measure from the high of the day down 53 pips, you will find the average daily range. So from that high there to there is 53. From that low there to there is 53. So if on average price moves 53 pips a day, I want to be able to say, if I short this now, so if I short this from here right now, and I want to risk 0.5% over 1 ADR's worth of movement, if this was to move up by 1 ADR, when it got to that level, whatever it was, I would be 0.5% in drawdown. Literally all it is. So we're using a dynamic measurement to calculate risk. That's what we do, rather than pips. So this is 53 ADR at the moment. Yeah. That's on an ADR 10. This won't be 53 all the time. Sometimes it will be 40, sometimes it will be 70, other times it'll be 25. So if you use 50 pips as a stop loss all the time, when this thing's moving 200 pips a day, you're going to get stopped out on a quarter of a day's movement. Yeah. If this thing only moves 10 pips a day on average for about 3 weeks, and you've got a 50 pip stop loss, it's going to need to move for 5 days solid just to hit your stop loss, which is why you use ADR, because ADR is a dynamic measurement of short-term price volatility. And therefore, you should be risking money on your account based on what this is doing now, not what this did years ago. I'll use this analogy a lot. Pound New Zealand is currently trading at 184 ADR. I used to trade this pre-COVID at 300, 400, in some cases 500 ADR. Yeah, so this used to move 500 pips a day. It's now moving 180 pips a day. So if I use the same strategy today that I used before COVID, I would be expecting it to move 500 pips a day. It's not. It's moving 184 pips a day. So if I set a target at 500 pips saying just move on average what you do on a daily basis, this thing would take 3 days to get there. Before, it would have taken 1 day to get there. So you have to adjust based on this. And your risk should be based on what it moves at. Same as ATR. And this is why it's so popular, ATR, because if you look at the ATR today, right now here, this thing is moving 7 pips on average every 15 minutes. Yeah. So each of these candles on average is 7 pips. So if you're going to short this now, you want to be using something like 10 to 15 pips as a stop loss. You want to give it a good couple of candles movement. If this was only moving 3 pips, you'd use a 6 to 8 pip stop loss, because there's no point in using 15 pips every time you take a trade. Because if it's moving 15 pips as an ATR, i.e. 15 pips every 15 minutes, you're going to get stopped out in one candle. If it's only moving 3 pips every 15 minutes, you could be in the thing all day and not even get anywhere near your stop loss. So you've got to adjust what you do based on what the thing is doing. Yeah. No instrument is going to move the same in any 2 days. You're never going to get the same price action 2 days ever. What it's done today, this exact movement today, it's never done, ever. You can go back and look through history until the 1900s if you want to. You won't find that price pattern. Therefore, you cannot use a fixed pip on anything, on any instrument at all. You go and talk to futures traders. They will take completely different risk on different instruments. So, you know, in futures, because you're only allowed to use fixed, you know, rounded up contracts. You can have one contract, that's it. Or anything above one contract, 2 contract, 3 contract, 4 contract, etc., which if you're in the US, you know anyway. But you ask them what they trade on the NASDAQ and what they trade on the Dow, they won't trade the same at all. They'll trade totally different contracts on the Dow and the NASDAQ because they move completely differently. The Dow, look at the Dow's average price, ADR, 55655. Look at the NASDAQ, 33292. Look at the S&P, 8210. S&P and the Dow and the NASDAQ, totally different ranges of movement. But look at the price action, almost identical. Price action is the same. Distance traveled, totally different. So you base your risk on distance traveled, not on anything else. And therefore, you have to adjust your risk accordingly. TP hit on S&P. So all 3 closed out, all 3 locked in, all 3 trailing. Let's see where we go. We just come off the highs on the Dow. Weekly high bounce. Actually, that's weekly low. So that's your... I don't know what low that is. It's probably 2 weeks. No, it's your 3-week high. That's a totally irrelevant line. Forget that. It has happened to bounce off the 3-week high, but I don't think that's by manufacturer. I think that's just pure chance. But it's coming out of propulsion, look. So I reckon we're off here today. In fact, what I'm going to do is I'm going to take my TP and I'm going to stick it there. I have not adjusted a manual trade on this for a long time. So yeah, if we do the gap fill there, I think we'll probably have a rest if it gets there. Probably the same on the NAS as well. Oh no, the NAS is out. So the NAS, we're out in highs now. Look, so again, that's an ADR. So that is 1 ADR of distance. See how far we got to go. That's what it does on average in a day. That's where you stick your target. If that's what it does on average in a day, go for it. But don't forget, you've already moved probably 3/4 of an ADR already. If we look at the NASDAQ. Yeah, you're already done an ADR, look. So it's already moved 1 ADR. So I'm asking it to do 2 ADR today. It's not going to do that, is it? So, I mean, it's very unlikely. So the logical target would say, okay, if we are going to have a run at these highs, you know, we're going to find some resistance there because that's where we found the resistance last time and they added more shorts in. What an M pattern is. So there's likely to be sellers there. So I'm going to get out if we come and retest that level because I would expect us, after having moved probably 150% of the normal average daily range, to be absolutely exhausted by the time we get there. So it's not likely to get through that level today, but it will probably have a crack at it tomorrow. So we're out of the Thursday high on the S&P. And again, you know, we've moved over an ADR today. So that movement there from the low of Globex to where we are now is 103.66. So that is pretty much 120% of ADR. So to ask it to move another ADR, just not going to happen, is it? So I'll see if we can have a crack at breaking out of that high. They've all got trailers on anyway, so it doesn't matter. But if we do get 200 ADR days, we get 200 ADR, which would be lovely. But we won't. He says, I'll come back on Wednesday and go, I said we weren't going to get 200 ADR. We got 300. But, one comment now. We're back down there. But you're not actually placing a stop loss then. No, you never place a stop loss in position trading. Position trading does not use stop losses. You're trading a position. So your position, the way you look at position trading is, this is what banks and institutions do. This is exactly the same way as banks and institutions trade. They have a position. You ask anybody in a bank or an institution, what's your position on the pound US dollar? They will say either long or short. They won't say flat, because banks and institutions are always positioned. We are always positioned. I am short pound US dollar. That's it. If pound US dollar goes up, I'm still short. So I need to add some more to change my price to wait for the price to drop. That's my short position. So you don't use a stop loss. So you're risking, what you're saying is, when you take an initial trade, I get in short. When prices moved 1 ADR against me, I want my trade to be no more than 0.5% in drawdown. So that's what you're saying is, how much do you want to risk by being wrong on your first trade? When you add a second trade here and it moves up by another ADR, this one will be 1% in drawdown. This one will be 0.5% in drawdown. Therefore, by the time it's moved 2 ADR against you, you will be in 1.5% of drawdown. If it then continues another ADR against you and you took another trade, the first trade would be 1.5% in drawdown. The second trade would be 1% in drawdown. The third trade would be 0.5% in drawdown. So your total position would be 3% in drawdown after moving 3 ADR against you. And this is why we use ADR. It takes a long time for price to move 3 times its average daily range against your position without pulling back far enough to get you out when you're using something like the RSI or whatever to... you can see on this chart how often, this is ATR obviously, but if you look at a daily chart, how often ADR changes. So right now we're trading at 89 ADR. Back here in, this is pound US dollar. So this is Liz Truss crashing the market. But after Liz Truss crashed the market, we were trading at 230. We're trading at 89 at the moment. So the average daily range here was 230. The average daily range here is 89. The average daily range there was something different. 160. Yeah. So 160 there, 89, 230. Yeah. You cannot use the same stop loss there as there, or the same risk profile. We're talking about how much you risk over movement. Whether you use a stop loss or not is entirely up to the trader. If you use a stop loss, you're placing an order in the market to tell you the market to take your money away. If you place a take profit in the market, you're placing an order to tell the market to take your position away when you get there. So you're either saying to the market, if we move that far, take my money. If we move that far, give me money. If you place that order and it moves up to there, they take your money and then it moves down to there, you win nothing. That's what position trading changes. When the market I was just trying to think of the best way to do this. But when the market moves up here, we add another position and we change our average price to there. It moves up to there. We add another position. We change our price to here. It moves up. We add another position and we change our price to here. And then it moves down and it doesn't even get back to where we first started. We get out with a profit. But if you put a stop loss in there, the market will take away your money. You'll short it again. push up, the market will take away your money. You'll short it again, push up, the market takes away your money. You lose 3 times to make it once right. You've got to get at least a 3-to-1 risk reward ratio just to break even. And if that takes 6 weeks for you to get one trade correct, what you've wasted is 6 weeks of your life. Yeah. So if you get in really small with a size that doesn't matter, pound US dollar, I'm in like 2% of drawdown or something on it, and I've been in it for 6-7 weeks. It's irrelevant. You don't make as much money, but you don't lose money. That's the difference, isn't it? So you adjust your risk based on what it's doing. If the ADR increases while you're in your position, your sizing and your spacing between the trades increases alongside it. And this is what the position trader EA does. It manages all of that for you. So when you set in the position trader EA, I want to risk 0.2% over one ADR of movement, and one ADR is 89, it will risk 0.2% over 89 pips. If ADR, while I'm in a trade, so I get in, and then 6 weeks later, I'm in my 5th position, but now ADR is 180, I'm spacing my trades out further apart because the market is moving more. Therefore, I'm not increasing my risk by getting in at 89 pips apart constantly when the thing moves 200 pips, because I'll be in potentially three new trades a day, 2 new trades a day. By the time you've gone 6 weeks in one direction, you've got 15, 20 trades on. So this is why we use ADR. It's dynamic. If the market is exploding, we space ourselves according to the explosion, not what it was when we got in. This is why so many people fail. And it took me a long time, me personally as well, to understand how important ATR and ADR is as a tool. You know, whenever you're doing any courses or you come across these systems, it's like this trades the euro US dollar. You get in when the Asian range is there and you risk 20 pips. But the thing moves 700 pips a day. It's going to move 20 pips in less than a minute. Yeah. But then when the guy built the system, it moved 50 pips a day. Therefore, you were looking at waiting for half a day for that swing to play out, because dynamically, the distance moved per day changes. A piece of paper that's got a system on it that was created in 1970 is not going to have the same impact as it is today. Totally different. So you have to work on ADR or ATR. You know, if it's a short term, you know, if you're trading on 5-minute timeframes, ATR right now, look at the ATR here. The ATR now is different to the ATR we had 3 hours ago. As long as you're using the ATR of the last X number of candles, you're always going to be up to date within X time. So for a 5-minute chart, if you use the ADR 10, you are always going to be measuring your movement on what's happening within the last hour. You're adjusting to how volatile we are now intraday. The market will sit there for hours and do nothing, and then it will suddenly take off. You want to be trading with the ranges that the market's moving at now, not what the market was moving at 8 o'clock this morning, because it was different. 8 o'clock this morning, it didn't do anything. That was 8 o'clock this morning. Yeah. This is the pound US dollar. That is where the London Open happened. Didn't open, did it? London opened when New York opened. Basically, London just didn't do anything today. They was just asleep. They were just eating egg McMuffins, sitting around drinking coffee. Then New York opened the market, and that's when it took off. So you need to be trading when it's trading. And it's the same with ADR. If we sit around like the New Zealand dollar CAD and go absolutely nowhere for weeks, you need to be adjusting to what we're doing. We are not moving now. So you don't target 300 pips. You target 60 pips, 40 pips. And if it suddenly starts to move 300 pips a day, you target 300 pips a day. And you risk based on 300 pips a day. I should cut that out and put it in the bootcamp, shouldn't I, really? That's how it works. There you go. Question answered in detail. We're stalling out a little bit now. Potentially flagging. not really dropping, it's flagging. We are sort of stalling there though. Aussie dollar yen has just hit ADR. Again, a little bit more strength in the Australian. New Zealand obviously has already done it. So some good levels coming up on these yen pairs, potentially, if they can get a little bit more movement today. But we see the one that I'm in is obviously not moving because I'm in it. Just checking, did I get you correctly that for shorter time frames, ATR is ideal? Yeah, ADR is ATR. That's it. Just replace the time with day. Average true range, time range, whatever you want to call it. Average daily range. It's the same thing. It's exactly the same thing. Except on ADR, the only difference with ADR and ATR is with ADR, you use this candle back. With ATR, you measure the current candle as well. I don't do that. If I was using ATR, I would also use this last close candle because this candle's volatile. So the ATR number here that shows on the chart, this is obviously an RSI, but an ATR line will show current candle. So let's say, for example, you get a news spike. We get non-farm payroll come out and the market does that on a 5-minute chart. The ATR will go through the roof, but that's where you should be focusing your attention. When you get a massive spike, the next candle that opens is going to take that into account, average out over 9 candles or however many candles before including that one, and it's going to be an absolute useless reading. News will blow everything up. All indicators. No indicator is going to work on news because news just drives it to extremes, and it's not normal price action, is it? So, yeah, that's it. That's all ATR is. But you have to use ATR. If you come across a strategy that uses pips, and this is why, as people always, back in the days when I started streaming and started teaching, anyone that came at me with a strategy that said I use a 10 pip stop loss, lunacy, because you can't use 10 pips as a stop loss. If it moves 10 pips a day, it's not going to get there for the whole day. If it moves 100 pips a day, it's going to get there within a tenth of the day. Yeah. What's it doing today? Is it doing the same thing today as it was last week, last month, last year, yesterday, 3 years ago? When was the strategy developed? In 1960. What was the ADR in 1960? No idea. How can you use the same pip level then? Unless it's the same, you're not going to get the same result. I think ATR takes into consideration gaps between open and close. Possibly. Yeah, maybe. Don't know. I don't use it personally. I'm interested. I don't do low time frames, as you know. I do not trade anything lower than an hourly time frame. So if this goes from there to there, I measure that. If it's gapped down by that much there, it's just take it into the equation. I don't care. I'm not going to be that exact. This market is not exact. It does not hit ADR to the pip and bounce off. When it gets there, it's telling me that it's moved a lot. Yeah. How much? Enough. It's moved. I'm looking for things that have moved. I'm not looking for exact measurements on anything. If you use gaps or don't use gaps, or ignore the first hourly candle of the day so that you don't get that broker manipulation candle, there's all sorts of ways you can measure ATR and ADR. There's a million calculations. I'm constantly being told that my way of calculating ADR is wrong. It's not wrong. It's different. It's just what I do. It's how I've been taught, and it's how I do. Other ADR indicators, people say, I've got this ADR indicator. It gives different readings to yours. It's a different ADR indicator. It's the same way as using an RSI 10 and an RSI 21. It's a different RSI indicator. Which one's the best one to use? The one that works. Which one's going to work? Don't know. You've got a crystal ball? Doesn't matter, does it? It's everything's rough. Is it better to use an RSI 14 or an RSI 21 on the hourly chart? I don't know. You tell me. Go back in history and have a look. Yeah. If you're using the RSI 21 at the 70 level and you shorted that, you lost. If you shorted that, you won. If you shorted that, you eventually won. If you were using it there, you won. If you're using it there, you lost. If you're using it there, you won. There, probably lost, but you would have won, depending how you trade it. But if you were using the 80 level, 80-20, you won 100% of the time. But you only had 3 trades. So which is the best the best RSI 21 on the hourly to use? Is it the 70 level or is it the 80 level? On this particular time that I am showing, which goes back to March last year, it's the 80. But if I go back to a different period in time where it didn't hit the 80, I wouldn't have taken a trade. But if all the 70s worked over that period I'm looking at, so if I get my chart and I just look back here, if it worked out that the 70 worked 100% of the time and it never hit an 80, the 70 is the best to use. So which one should you use for the next year? And again, one of my mentors every year, and I still rib him about this, used to get a guy to do an analysis of every forex pair and come up with the optimal moving average. And basically what he meant by optimal moving average was he got the guy to apply all moving averages to a chart, and you do this automatically now with AI or something, but and identify how many times it bounced within X number of pips or X number of ADR, as I would, at a moving average level. And the one that respected it the most, that is the one he would shift to for the next year. So he's basing what happened this year and he's assuming that it's going to happen next year. And there is never 2 years on the trot that he would use the same moving average, which tells you what? He was wrong every year. Because if he was ever right, he would never adjust it. Fact. He knows that because I've pointed it out. But is it right or wrong? It's just an indicator. So what he was looking for was a rough idea of where we pull back to before we bounce. None of them were right. None of them were wrong. They were all roughly different, which is where people put the alligator on their chart. You know, where you get like loads of different moving averages on the chart. There's one in the middle and then lots of different moving averages, and price gets roughly into a certain distance in the moving average and then it bounces out again. It's because you don't know which one it's going to be. Sometimes it will respect the one in the middle. Sometimes it will respect that one. Sometimes it will get to the outer edge. Sometimes it goes way beyond it. Look at a Bollinger Band. Stick a Bollinger Band on your chart. You sell when it gets outside the Bollinger Band. Do your heck. Sometimes it gets outside the Bollinger Band and it never comes back. Look at that. Sell it. It's outside the Bollinger Band. Boing. Wrong. All day. You were wrong all day. You sell it when it's outside the Bollinger Band. Okay, sell it, sell it, sell it, sell it, sell it, sell it. Why is this thing not coming down? We'll wait until the next day. Then we'll sell it. Okay, sell it. Oh, crap. Useless. Utterly useless. And yet you'll see people developing and selling strategies based on this concept. Rubbish. It's you know, all indicators are great sometimes. All indicators are crap sometimes. You just need a reason to get in the market. But if you try and pick an exact place to get out, you will never, ever, ever get it right. Every now and again, you'll get one where you'll just get it right. You'll be like, I am going to sell at that propulsion gap. Bang. I am an expert. Yeah. You say, I'm going to sell at that propulsion gap. Whoops. I'm going to sell at that one. Whoops. I'm going to buy at this one. Whoops. Yeah, I'm going to show you a million times where it doesn't work, and you can show me a million times where it does work. So what is it? Right half the time? Probably, because that's what it does, isn't it? Market goes up and down. It can only be right or wrong. Which indicator you choose to decide on an entry, irrelevant. Which ADR should you use? ADR 10, ADR 5, ADR 30? I don't know. What should you be measuring the smoothness of the average daily range over? Don't know. I've done analysis on all of it. Sometimes it's all of them are brilliant. Sometimes none of them are any good. Depends what the market does. There is no accurate in market. Market is random. You have to be random with it. And if you're constantly trying to find a new way to crack this, you will die before you get there, because you can't crack something that's random. This thing is pushing like a loony. I can guarantee you that 90% of the traders out there are selling the crap out of this now, because it's got to come down. It hasn't got to do anything. It'll do what the market says it's going to do. And we don't know what the market says it's going to do, because all the participants have all got different order values and they're all placing them at different levels. They haven't got a clue which way it's going either, but they can manipulate it. So they've got an idea short term where they can take it. Therefore, they can make money. We can't, because we can't predict what they've got in their order books or see it. But there's people out there right now going, this is a beautiful flag break long. Flag break long. Try saying that after a while. There's people out there right now going, this is a beautiful Bollinger Band mean reversion. There's people out there now planning their trades going, that's brilliant. When it pulls back to the 20, I'm going to buy it. There's people out there now going, I'm going to short it now on that bearish engulfing. I'm going to target the 20. They're all right. They're all wrong, depending on what this thing does next. None of them have got a clue where it's going next, have they? But everyone can put a plan in place, but you can't be right until the market proves you right. So you just press buttons. Press buy, press sell, and hope it works. I'm just going to move my stop up and just lock a bit more profit in, because this is flagging. It is starting to roll over. We're definitely getting stuck up here. It is getting towards lunchtime in the US, so but I'd rather just bank a little bit more and just lock the profit in. There we go. I will leave it there, I think, today. I'm back on Wednesday. We'll obviously see how we go this week, but still up in greed, look. Obviously, keep your eyes peeled on this, because this is a very, very fluid situation we're in at the moment. Iran asked Qatar, Saudi Arabia and Oman to ask Trump to press Israel to agree to an immediate ceasefire. Iran and Qatar, Saudi Arabia, that's the same news event twice for some reason. But yeah, just keep your eyes peeled on this. Obviously, this is going to affect potentially what the market does over the next few days. So we potentially got some calm coming, which is good. But hopefully we can calm oil back into a bit of a bull move before it collapses, because that's where I think oil should be going, down. But changes every day, doesn't it? Especially at the moment. So I'll leave it there. Anything you need, let me know. I'll be in Discord or Telegram. Back Wednesday morning and Wednesday afternoon for the normal sessions. Wednesday morning is members stream. Wednesday afternoon is normal, same as this. Good luck, basically, at the minute, because obviously we've got a lot of stuff going on. We've got Trump still saying a load of stuff. We've got conflict going off here still. So anything can go anywhere today and over the next couple of days. So just be a little cautious with everything that you're doing. But obviously what goes up usually comes down. So extensions still going to work. Yeah. So depending on how you're trading, whether you're using stocks or position trading, obviously just keep doing what you're doing. All right. So have a good day. Anything you need, let me know. Other than that, I will see you next time.